Yeah, you're absolutely correct. Solid numbers, but that was to be expected. Single-digit beats. I mean, no one's running out and buying stocks when you're just beating by single digits. I think what's the most important thing was the messaging around 2026 here. And the company came out and gave a very strong demand signal on 2026, talked about essentially being sold out on GPUs, supply constrained, and also within that 500 trillion you mentioned, you can back out this year, and it implies around $320, $350 billion for the data center business for next year. So very strong growth forecast again for next year. And we needed to hear that messaging given the concerns around the AI capex bubble that has kind of led to a correction in the last couple of weeks.
Well, Jensen delivered in terms of the positivity that was needed, both on demand and on supply. Are we past peak GPU pricing power?
I think not yet. While the supply chain is still constrained and demand ahead of supply, they still have pricing power in their pocket, and also on their roadmap, once they can deliver better performance per watt going forwards, that kind of leads them to better pricing. So while you're constrained, I would say better pricing is set to continue. So better units from bigger supply chain, and also better content due to better, more performant chips.
So for now, we can continue to rally and the bubble talk concerns get pushed to the side. But David, does talking about a bubble miss the point? Is it more about the financial health of these AI labs, of Anthropic, of Open Interest? Rather, Open Interest is here. We're not spending on Open AI. We're not spending on data centers as far as I know. But Anthropic, all of them to continue to raise these giant amount of fundings to push into that spending. Is that not the real concern? Do we not need to address that head on? And what happens if they can't keep raising huge trillions, numbers of money to continue to build out AI infrastructure?
Yeah, look, essentially there's three questions we keep getting from investors right now around AI names. Number one is, are we in the AI infrastructure bubble? Number two, who's going to fund this, to your point? And number three, AI monetization, like show me the money, who's making money out of this? That's front and foremost for investors at the moment. And I think last night we got some answers, or certainly Nvidia tried to kind of address those concerns. Now they don't go away, but certainly kind of eased concerns from investors. And I think, on the first point, are we in the AI infrastructure bubble? I would say we are in an AI news flow bubble right now. Maybe not quite an infrastructure bubble. There certainly is a bit of a disconnect between the two, because essentially, we're most constrained here on power availability. That is the biggest headache for CSPs, biggest headache for Nvidia and their customers.
Wait, is power the biggest constraint or funding? I mean, if
right now power is the biggest. If Altman
wants to spend 1.4 trillion, but he only has 13 billion in revenue, where does he get the other, 1.39 trillion.
No, that's a good point, Matt. And but you have to look over what time frame is that, right? I mean, we're all cognizant of the fact that data center number 2 doesn't get built until data center number 1 gets kind of filled up, essentially. So it will take time. So don't read too much into that 1 trillion. I mean, that's where we're going, right? That's a kind of aspirational. But in again, going back to kind of the reality, that disconnect between what the news flow would suggest and what actually can be rolled out in terms of standing up new data center capacity, it all takes time. And that's important here as well, because it gives us maybe more time to answer point 3, which is the AI monetization.
Yeah, like who's actually who right now, that's not Microsoft, or other big tech companies, actually making real money on this?
Yeah, I mean, that's front and foremost for investors. I would say, we started to see kind of a split within AI into kind of previously with the accelerated kind of AI. Now we're moving into a bit more generative AI, and then next is kind of agentic AI. On the first point, there's already monetization, there's already ROI on that. You can see hyperscalers, for instance, social media companies, better click-through rates, better market share, more screen time for users. So that is a ROI right there.
Is that enough to fill the gap should funding markets seize up, or at least become more complicated? You're already starting to see some of the fears. Oracle CDS spreads have started to widen out, doubling just over in the past month. If that funding market disappears, do these hyperscalers have the ability to get that monetization to replace it?
Well, I think on the second 2 points on generative AI and agentic AI, we haven't seen much in terms of monetization of those two yet. So the funding that has been done already by CSP has justified the kind of ROI that we've seen from essentially recommender engines. But the funding that's kind of coming next year and beyond that, we really need to see monetization on generative AI and agentic AI. And that is where there's a big question mark and not clear exactly what those business models will look like and how much revenue can be generated off that.